Hey everyone, Apple's stock price is falling after reaching close to $200 per share, now at roughly $170 per share as of this recording. So in this video, I'm going to answer if investors should buy Apple stock on the dip. Shout out to channel member Andre X for requesting this video. Now, the latest headlines around Apple stock have been not very great, right? It reportedly exited its ambitions of developing an EV vehicle, and its latest AI technology advancements have been missing, have been absent. And so investors have kind of gone away from Apple and not treating it like an innovative tech stock. And we're going to see towards the end of the video, when we look at its valuation, just how much investors are not treating Apple as an innovative tech company anymore. They're treating it like a boring old consumer staple company, and we're going to see that towards the end of the video. So let's jump into the details. Let's take a look at Apple's metrics and determine if it's a buying opportunity.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So what you can see here is a price chart of Apple over the last year, and you can see that trend I talked about where the price approached $200 per share before falling down to $170 per share, approaching that near-term low here around $168 per share in late 2023, where presumably there could be some resistance, or if it falls through that price, could fall all the way down to close to $150 per share as the next so-called resistance point. Now, I don't talk too much about technicals and technical analysis, but these are some very pronounced trends here. That's why I thought I'd highlight it in this video. So when you're looking at revenue, Apple over the last 10 years has done a great job in boosting revenue, but over the last 2 years, it hasn't looked great at all. In fact, it's looked pretty flat. You could see after approaching close to 400 billion in annual revenue, Apple's revenue has been flat, roughly flat, and there were several quarters in a row where revenue decreased year over year. Notably, in the latest quarter, news came out that Apple's iPhone sales in China in the latest month have been disappointing. Huawei is gaining traction again after falling out of favor because lack of access of latest generation semiconductor chips. Huawei has found a way around that and is now competing again and again taking market share away from Apple in China. China has been a disappointing market for Apple for the last, I would say, 6 quarters at least. Growth has been sluggish for Apple in that region, and several of the companies that I follow, it's not exclusive to Apple. Companies like Nike and Starbucks that report significant sales in that region have also shown decreasing sales or lack of robust growth in that region. So that economy has been slow to recover from the COVID lockdowns and now the reopening. In 2023, I mistakenly thought that the Chinese economy would recover robustly as it reopened from lockdowns. That didn't happen. So that was one reason why sales have been sluggish for Apple, Starbucks, Nike, and others operate in the region. So China accounts for roughly 15% of Apple's sales. So it's not a too big of a concern for investors, but it is a concern, right? 15% is not nothing, and China's economy is growing much faster than the US economy, and the population is much larger. Middle class is growing much more quickly, and so you would want Apple to gain traction in the region, although the more important regions are outside of China for Apple. Still, I think the more concerning factor for Apple is not geographical, but technological, and the lack of innovation in AI. Now, Apple has hinted that it will come up with significant AI development by the end of this year, but investors don't really know yet, consumers don't really know yet what that's going to be. One area that could improve meaningfully is the phone assistant, Siri. It could do a much better job with being more intuitive and being more capable, right? So right now, not very strong in terms of what's available comparably to what is available on the iPhone. So that's one area, just one area it could implement some improvement. But the Vision Pro headsets, that's been a lukewarm product at best. I know it's just introductory, um, but it hasn't gone that well. It hasn't been, extremely popular where it's selling out and customers are really going after it, clamoring for it. That's not what's been happening. It's been a slow advancement, and it was never going to be a huge product right out the gate, but still, it's been a little bit tepid in terms of demand. So, all of those product reasons, I think, are more concerning than geographic reasons for Apple's lack of growth here in the near term. Now, if you look at Apple's profitability, that's doing better than ever. Its operating profit margin of 30.76%, it's near the highest it's been in the last decade. So they've done a great job in managing the business for profitability. That's going better than ever. And over the last few years, it's been really strong. Part of the reason for this is a growing share of Apple's revenue is coming from its services segment. And the services segment is more than twice as profitable as the hardware segment. When Apple sells you an Apple Music subscription, that's more than twice as profitable on a profit margin basis as when Apple sells you one of their products like an iPhone, an Apple Watch, or AirPods. And so, as more of its revenue comes from service, that's been boosting its profitability. And that's going to be an ongoing trend as it evolves as a company, as it grows as a company. So, that's been good news. That's been a really good part of the investment story for Apple. And that will continue. That will continue. But Apple needs to continue with this innovative product backlog pipeline so that customers will stay in Apple's ecosystem. That's where Apple really needs to create something in the next year or two that will really create some buzzworthy uh, customer response where sales actually can increase, show some growth. That's been the area of most lacking for Apple in the recent, I would say, 4 to 8 quarters. Cash flow from operations has been similarly strong. 30.19% cash flow from operations to sales. And Apple's business model allows for it to generate strong profit margins, strong cash flow from operations. Remember, Apple outsources most of its manufacturing, so it doesn't deal with those expensive capital investment. It just invests in the inventory, which it doesn't really hold on to for a very long time, given all of its channel partners like Target and Walmart and Best Buy and AT&T and Verizon and T-Mobile that really help facilitate sales of Apple's products worldwide. So it's cash flow from operations, profitability, the business, the network, the logistics, all of that is in great shape. But Apple needs that product innovation to keep this cycle going. It's ready, it's well fueled, it's a well oiled machine, but it needs to continue with the innovation to make sure this goes. Because if that innovation doesn't come in, that product, that hardware innovation doesn't come in, this well-oiled machine could stop that spin. I don't suspect that to be the case. I think Apple has proven itself over the last 3, 4 decades that it can continue to innovate and deliver products in different categories that consumers are willing to pay premium prices for. So investors can reasonably assume that Apple will keep up with the latest technological advances and keep providing consumers with products that they're likely to want to pay premium prices for. I don't doubt Apple's ability to do that. Even though in the near term, Apple is pressured, and if you look at what analysts think for sales growth, for 2024, analysts are expecting a meager 1.3% sales growth from Apple. That is extremely skinny growth there for Apple. And then for fiscal year 2025, just 6.5% growth expected for Apple. So it is getting better, expected to get better, but that will take some time. and that will take some product innovation to deliver on. But if you look at the valuation, like I mentioned in the beginning of the video, Apple is trading at a valuation similar to Procter & Gamble, a consumer staple company that sells products that come in bottles, and shampoo and lotion and laundry detergent and things like that. You're trading at the same price as an innovative tech company, or supposedly an innovative tech company. So Apple at a forward price to earnings of 23.78 after this stock price dip is relatively attractive. So I would say this dip is a buying opportunity. Investors can buy Apple stock on this dip. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.